Over the last 3 months, gold has seen a 20% rise in response to unprecedented uncertainty. Ray Dalio even called it a Fed-led paradigm shift. So here with me today is Will Rhind. He is the CEO and founder of GraniteShares. We're going to be asking him whether he thinks this is accurate. Are we seeing a paradigm shift here? Will Rhind, thank you so much for joining us in studio.
Thank you so much. Good to be back.
Yeah. What do you think? Are we living in an alternative universe?
Well, I think it very much could be a new paradigm shift when it comes to gold. We've been, watching the price of gold sort of trading in this range for the last couple of years, and then suddenly, there's a big about turn by the Federal Reserve at the beginning of this year, and now we see interest rates, falling down again, but more broadly against the backdrop of interest rates falling all across the world. 18 trillion now, roughly speaking, of government bonds on issue around the world with negative interest rates. We see countries in Europe, particularly Denmark, offering negative interest rate mortgages. I mean, this is a completely different or new scenario.
Well, I was going to say, do you feel that U.S. interest rates are still too high in comparison to those of Europe, for example?
It's so hard to say because, on the one hand, you can make the case for, which obviously the president would make, that yes, interest rates are too high, and it's now against a backdrop of, almost zero, if not zero, or negative interest rates in other countries, and the US is at a competitive disadvantage. On the other hand, you can say that even now, with the rates coming down, that rates are still very, very low by historical standards, and this is still a nightmare for savers and for anybody that's looking for income in the market.
So what is the Fed to do? Are they on the right path, Will? How do you see it?
Well, it's a tough decision. I think that, again, the hardest part is that it's against a backdrop where other countries around the world are lowering interest rates and inducing the economy through stimulus. So you're almost forced to join the party at some extent, because otherwise your economy starts to be at a disadvantage versus theirs, and you get into the situation where countries are effectively competitively devaluing their currencies, and it is just certainly not helpful for the US with a higher interest rate and therefore a stronger dollar.
Well, it's been a while since we last spoke. It was before this huge boom in the gold market. So walk us through it. How do you feel about the gold price right now? Do you like what you're seeing? I'd be positive on gold for a while, obviously. I think that the gold market, in many ways is just kind of getting started. My only slight caution is that the price has gone up, very quickly, I guess over the last few months. And so, a small correction or a blow off here, would probably be healthy. But certainly when I see the trajectory, and certainly when we saw that sort of parabolic move over 1,500, I was a little bit nervous. But again, it's against a backdrop which is supported by people, investors, being really concerned about what's going on and looking for ways to hedge against these interest rate falls. And speak to us a little bit about the flows we've been seeing in ETFs. I mean, unprecedented here on the gold front. Is that telling us finally that retail and institutional investors are really embracing and loving gold, maybe?
I think so. I mean, again, I think it's still early days, frankly. Since the beginning of 2016, we've seen net positive inflows into gold ETFs kind of around the world, particularly here in the US. That's obviously started to accelerate over the last kind of 6 to 12 months. And I think that we'll continue to see that. I mean, in many ways, where do people have to go? I mean, we're in this world where, buying government bonds of different maturities, you're getting next to nothing. People are worried about currencies debasing. The stock market is looking a bit more volatile given that growth is slowing down. We have the trade war, with China. Where do people go in terms of a safe haven or as a non-correlated asset of high quality? And of course, gold is one of the most obvious places that people will instantly think of.
Well, you also you mentioned some factors, solid factors here that will move gold. But what about the situation in Europe? We see the new government in the UK. We see the changing of the guard now probably happening soon in Italy. So a lot of moving pieces in Europe. How much of an impact do you think that can have?
Well, as we've seen before, I mean, in many ways, the good news is we've seen this movie before with Greece and with all the other stuff that happened in Europe, going back to 2010.
And so we kind of know what this playbook looks like to a certain degree. And what it does for the markets is breed uncertainty. And uncertainty creates volatility, and that causes investors to look for risk-off type investments such as gold.
Right.
But certainly, Brexit, it continues to be a big concern for investors. Like you said, the Italian situation. You now have Germany, news that the Bundesbank has green-lighted the issue of negative mortgages for the first time in Germany, which is just a huge, huge development. And so I think all this is like very, very worrying for people in Europe. And again, this is against a backdrop of very, very slow, anemic, if not negative economic growth. Poor performance of domestic currencies, obviously relative to the dollar, and people are looking for some way to protect themselves.
Will Rhind, well said. Come back more often. Thank you so much for dropping in by the studio today.
Thank you.
Yeah.
Thanks for having me.
Yeah, and thanks for watching. We will have much more for you on Kitco.com, so be sure to stay tuned.